morning, everybody. It's Tuesday, June 4th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn down a penny and a quarter at 442 and a quarter. July soybeans were down a penny at 1183 and a half, and July Chicago wheat was down 3.5 at 669 and a quarter. Yesterday, after the close, crop progress and conditions came out. Corn rated 91% planted, 75% in the good to excellent category. And I know we'll talk about that here in a little bit. Beans came back 78% planted. That's versus 68% from last week, 73% for the average. Winter wheat ratings went up a point to 49%. And spring wheat was rated 74% good to excellent, which was significantly better than last year, 64% at this time last year for their rating. Good morning, guys. We were talking before the show. Without oversimplifying things, it just feels like the market has turned bearish. We're starting with a really solid, good to excellent rating that can be argued, I'm sure from different parts of the Corn Belt, but it is what it is at this point. So I guess, Ben, maybe kick it off with a couple of initial thoughts, and we'll work it around the room.
Yeah, pretty steep decline in both corn and beans over the last 5 sessions. That price movement was rewarded with really good ratings yesterday. I'm not a person who gets too wrapped up in ratings this early in the year. I think that we were all aware that there was a lot of good planting pace out there, a lot of crops that came up well. I akin to, we look at those kind of reports and they're looking behind us as to what's already happened, yet we trade a futures market, which is what hasn't happened. So you can really, you've seen some of the debates over previous years of the correlation to ratings to final yield. And I saw one of the university professors yesterday. He actually made a very good point that this early in the season, it can be the possibilities are much wider and less precise as we get later. And it sounds simple, but it's true. We have a long way to go here. The decline, I think that we hit some pretty good planning window to wrap up some places. And the grower, been a seller. Managed money got ticked off under some major moving averages and piled in as well. At the same time, we have had really good export inspections. We're seeing some non-traditional business, even if in small chunks. I think that sends a really solid message that probably there is some concern out of Eastern Europe, Russia. So a long way to go here. It's certainly, in technical parlance, it is in a bear market. I think that there's probably been some necessity on the grower's part to get some things sold. We talk about, kind of getting jolted last year, and that reaction to not have that happen again has probably led into the piling on as we continue to go lower. So we're also heading into a roll period, which typically you will see markets weaken then, and that starts on the 5th to the 8th business day of the month. So Friday or Monday it gets going, and people clearing out a lot of bins as this crop goes in the ground and they're off to a decent start. And we know in the East for sure that there was a lot of bushels out there on farm, and we've seen that also reflected in basis in the East. So hopefully that can right itself here over the next few days. So.
Yeah, what's interesting about that is, on this collapse in price, spreads have done nothing but narrow.
No.
So you've got July decent to 19 cents, which is basically the high of the range for, the last 6 months or so. So I think it makes sense. The selling's all coming new crop. People are selling it because the crop got planted. I think farmers, everyone's calling in super scared, bearish, nervous, whatever you want to call it. So yeah, it'd be interesting to see how we act on that first notice day. You can kind of see where, everyone's getting short. The funds are getting, more short. Farmers been selling aggressively into demand. into basis narrowing, some of these things. So it'll be interesting to see once you get that last, kind of basis only contracts that have to be priced going into first notice day and all those things going. And then you're going into the 4th of July weekend potentially with a big short and kind of everybody throwing in the towel. So not that that's bullish by any means. If the weather stays perfect, won't matter. But it is kind of interesting to see how this is all kind of panning out timing wise.
Yeah.
Sure.
Well, and I think that timing wise of it too is we know that we're heading into wheat harvest. So a setback there should not be surprising. I think that it's probably a year that you're going to see, at least in the wheat market, you'll get your harvest pressure. We'll get that wrapped up, and then I think wheat's going to resume a modem of strength. Until we get into that August, September, October timeframe, because the world has got to figure out that shortfall, and there's some things out there that are problematic. So, between Russian shortcomings, India not going to be a participant in the export market. I think it kind of adjusts some of the coarse grain flows in that time frame, and I would expect a lot of chatter on Australia as we get into their growing season.
Well, I saw too Matif U.S. wheat spreads have really increased the premium, so wheat is starting to get kind of closer to competitive. U.S. wheat, which is rare, and our wheat market doesn't tend to like that when we get competitive. So, yeah, it doesn't seem like there's, it's not like it's just the U.S. wheat contract's just way out of line. They're kind of following the world markets here, and I think the same in the U.S. corn. So you're getting lots of hedge pressure and selling pressure, but you're breaking into pretty competitive world markets. It seems like.
Yeah, and I think it's something that we'll have a better view of 6 months from now, is how much of last year's decline was just the pure result of a grower getting squeezed and having their back to the wall. And that I think that's something that kind of fascinates me a little bit, because I think it's probably one of the larger long squeezes that I've seen in the years that I've been around trading. And here we are sitting roughly midpoint of where we've traded in the front month for most of the year, 40 cents off the lows, 45 cents off the lows July versus where we bottomed out March. And we're doing good business. We're using corn, and I would expect at some point we see a broader demand for U.S. corn, especially as wheat stays highly elevated. So we'll see how that plays out. I think the biggest speed bump for corn right now is it possible to find more acres at the end of June? I think that could be the real wet blanket if that were to materialize, and I think it's a difficult way to get there, but it's possible.
Yep. Yeah, I mean, honestly, the way we're beating up the market, I wouldn't be surprised if we keep beating it up into first notice day, if that doesn't matter anyway. Because we're kind of trading. I mean, I shouldn't say that doesn't matter, but if you gained a little bit of acres, I feel like we're kind of building in a pretty ultra bearish scenario right now. The market is, so we'll see how that all plays out. But yeah, I mean, it's just hard to. It's gonna be a tough long between now and first notice day probably. Yep. There's plenty of selling. There's the weather looks pretty good. Those kinds of things. So we'll see how if we can stabilize here.
Well, I thought Jason made a good point too, Justin, and you tend to agree. I mean, it's a patient. There's an element of patience here, as difficult as this market's making it feel right now. You're throwing the kitchen sink at this thing with a lot to know still. Wouldn't you agree?
Well, it's just tough. I mean, you're looking at. We've been talking about this for a long time. I mean, a lot of people are below break even, and there's just it's like the fear of missing out, but it's just like scared, right? Of I need to sell it because it's going lower. And you can kind of take out all talks of margins and profitability. It's just, well, I think it's going lower. It acts horrible, and it does. But it's really tricky, markets when that happens, and then you step into a weather problem, and all of a sudden you realize you're sold way below, what you thought your yields were, and It's a really tricky environment, and that's why we always talk about, have that plan B, like figure out where that gap is between, how much protection you need between where you are and where crop insurance kicks in and all those kinds of things, without handcuffing yourself where you've locked yourself into a loss, if you were to get into a bad yield environment. So it's really tricky. It's an emotional thing for sure. And this is one of the trickier years I've seen, because your costs are so high. So it's going to be not easy. That's for sure.
Well, and it's not vanilla either. I mean, I think you literally have to open yourself up to new and innovative ways of looking at it in any contracts, right? Whether it's structured products and all these different things that are available to you, because that could be the difference. To your point on the plan A, plan B type stuff, it's not as simple as I think it's going lower, I'm going to sell it all and be done with it. Like, it just seems like there's way more to that piece.
Yeah, 100%. And if you knew your yield, and it was just right, but you don't, and so it can be just as dangerous to get super aggressive with a big yield assumption as it can be to be conservative. So you really got to kind of factor all that in. I saw this happen a lot, and I'm not 2012. Some of these years where we had a really good start, people got super aggressive. And all of a sudden, yield started getting slashed, and you had to make a really hard decision because the market rallied. So you just have to be really cautious of what all those outcomes mean, based on your decision there. So,
oh, very good. Ryland, we got a couple minutes here before we come into the open. Give us a little breakdown on Livestock here as we started the week.
Yeah, kind of a two-sided trade yesterday. The cattle market just seemed like there really wasn't much news to trade. We're obviously still pretty cautious over the headlines that have been coming out here as of late, especially with a lot of focus on bird flu and the impacts of that. But nothing so far this week. It's been pretty quiet. We kind of fell pretty hard early in the session yesterday and then bounced back. So I think it's just right now everybody's going to be staring at the discount in June relative to cash, and now with option expiration on Friday, first notice day on Monday, we'll probably see some kind of convergence. It's just hard to say which is going to move first, the cash or the futures. We are probably seeing a little bit of new longs coming in here, just to try to step in, kind of stop the move, maybe try to bottom pick a little bit. But overall, there's been some better action in the meat. Even with no cash, looks like beef 90s are still kind of marching higher here. So we're seeing that kind of demand that we wanted to see at this time seasonally. Cutout was up as well, with choice going up 240 at 315.60. So, if that's going to keep on going higher, it's going to be hard to kind of break the cash market, I think, just in the near term. So still there's a lot of week to trade it. I think just the initial impression is that cash could probably look a little bit steady this week, but it's pretty early to call it. So I think that's what we're going to be sticking with for now.
Very good. I saw hog prices surging in China, but still not really getting them to expand, as you've touched on a couple of times.
No, not quite. And a lot of that could be from governmental support. It just seems like they're slowly kind of building this back up, this profitability, but still a long way to go. I mean, like, obviously feed costs have come down considerably. You got to wonder if there's going to be a big shift in kind of those rations at some point. But overall, it just kind of seems like that's something to keep an eye on if we are going to see their prices really start to explode, profitability really start to come back. But it feels like the market maybe seeing a little bit of artificial support just from government programs and such. So we'll see how that goes. There's a long way for that cycle to kind of pan out.
All right, very good. Appreciate the input there. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day. We look forward to talking to you tomorrow.
Thanks, Dan.